Hello friends, we'll be discussing an illustration which is related to the reissue of share concept. Now when we talk about reissue of shares, this basically happens whenever a forfeiture of share happens. So if the shares are cancelled, the company has the authority to go ahead and reissue those shares. Now this reissue usually happens at a discount because as these are second-hand shares that we can call for, or we can term it as second-hand shares, hence we are reissuing it at a price less than the original face value. So let's figure out with the illustration how to pass on the journal entries that we have already learned regarding the reissue. So this will be the journal entries related to especially reissue of forfeited shares. Let's start with one. Now the company details that we're talking about is Ali Ahmed and Company Limited, which is a listed company in Karachi. That means it's a public limited company in Karachi here. Now, the company has been formed under the Company Section Rule Act 2006 and it has certain authorized capital out of which it can issue certain capital for public listing. So let's figure out what details we have in this question. Now, the authorized share capital of the company was stated as 1 lakh equity shares of rupees 100 each. That means the company had a maximum capping of 1 lakh equity shares, out of which they are able to issue any amount of shares, but nothing that goes above 1 lakh. So that's the maximum capping that they have. Let's figure out how much they have issued here. Now, the company decided to raise equity finance by issuing 20,000 equity shares. That's correct. Out of 1 lakh equity shares what they have, they decided to issue 20,000 equity shares. Each were payable at a premium of 20 rupees. That means 100 rupees is the face value and the issue price was 120. That means per share 20 rupees premium is what they were expecting, and this was payable as follows. That means application, allotment, first, final call. We'll be able to gauge that right now. Now, the details that we have given, that means 120 bifurcation has been given here. On application, they took around rupees 30. On allotment, they took rupees 50, which includes the premium of 20 again. On first and final call, they took rupees 20 each. Now, the applications that they received were for 24,000. The issue was for 20,000. However, they received an application for 24,000, which is a clear case of oversubscription. Now, what the company did is that they rejected the 4,000 application. That means a complete refund was provided to them. Now, there is Mr. Khan in the question, who is the holder of 1,000 shares. The company decided to forfeit his shares after he subsequently didn't pay the first and the final call amount. That means he missed out on paying the first and the final call amount, and hence the company decided to forfeit his 1,000 shares here. Now, after forfeiture, the company decided to reissue 500 shares. That means the forfeited shares were 1,000. Out of those 1,000, the company decided to reissue 500 shares at the rate of 90 each. As we discussed, that whenever reissue happens, it is below the face value of 100. That means whatever face value is there, it will be a little less than that. Not completely less, but a little less than that. So in this situation, the face value was 100. They decided to reissue it 90 rupees. Now, we have to pass the journal entries here. Now we have to pass the journal entries and we have to show the bank account details. That means the bank ledger account has to be shown in this question, or rather in this illustration. So the first thing that we'll be doing is we'll be passing the journal entries here. So let's start with the journal entries preparation. So the first journal entry that we have to pass here is the receipt of application money. That means you have received application amount for 24,000 shares. That is what we have to pass here. So let's start with that entry first. So the total amount that we should receive here is, on application we are supposed to take 30 rupees. So we have received for 24,000 shares multiplied by 30. That is the amount that we have to take into consideration. So let's pass on that amount. So the total amount that we have taken into consideration is 7,20,000. Now out of 7,20,000 we have refunded 4,000 shares. So we'll be passing the refund entry here. So the total refund that we have done is for 1,20,000. That means 4,000 shares multiplied by 30 will give you an amount of 1,20,000. So that much has been rejected or refunded. Now the next step is that moving the application money to the share capital. Now this will be the balance between the applications we have received and the rejection we have done. That means total 7,20,000 is what we have received. Out of that 1,20,000 is what we have rejected or refunded. So the balance that is left here will be taken into consideration. That will be somewhere around 6 lakh rupees. Now, the fourth entry that we'll be passing here is the allotment due. Make sure there is a premium here that we have to take into consideration. Hence, allotment will also include the premium as it was mentioned in the question. Now, the share allotment entry has been mentioned. That is, this is the due entry that we have mentioned. So, share allotment account debit to share capital to security premium. On the debit side, it will be total of the allotment money, that is rupees 50, which has been mentioned. Now, this 50 includes 30 rupees as capital and 20 rupees as premiums. On the credit side, we have mentioned two things: share capital and securities premium. Accordingly, the amount will be divided there for 20,000 shares. So the total amount that you're supposed to receive in allotment is 10 lakh rupees. Now this 10 lakh includes capital amount of 6 lakh and premium amount of 4 lakh. Let's figure out what do we have in the receipt entry. As in the question, it was never mentioned that any person or any shareholder defaulted on the allotment money. Hence we expect or we assume that the whole amount of allotment of rupees 10 lakh was received by us. Hence that will be the entry that will be passed here. Now, unlike any other question, in this question we don't have any kind of pro rata. Hence, there is no adjustment in terms of allotment money being adjusted or anything like that. In this question, there is nothing related to oversubscription at a major level whereby pro rata is supposed to be taken into consideration. Hence, these are the basic entries that we are passing. After this, we'll be going forward towards mentioning the entry of share first call being due and receipt of it. So let's start with that journal entry preparation now. So now the entry that will be passing right now is referred to only first call due. So let's pass that entry. Now, what we're expecting out of the share first call is 4 lakh rupees. That is 20,000 multiplied by 20 will give an amount of 4 lakh. So that is the amount that we're expecting here. Let's pass the receipt entry and figure out whether we have that much of amount or not. Because in the question they have mentioned that there is Mr. Khan who didn't pay that much of amount. That means 1,000 shares multiplied by 20, he didn't pay up for the first call. So out of 4 lakh, 20,000 is what we are not expecting to receive because that is calls in arrears. So the balance 3 lakh 80,000 is what we would have expected or we would have received here. So in the bank account, that will be 3 lakh 80,000. Similarly, we'll pass the share final call entry for due first. Again, share final call is of 20 rupees per share. That means 20,000 into 20 will give you amount of 4 lakh that you can expect or you're supposed to expect. Again, in this case, Mr. Khan didn't pay up that much of amount. Hence, 20,000 is what we'll be not expecting. So the total amount that we'll receive here is only 3 lakh 80,000. So let's pass that receipt entry now. So the total amount that we have received here is in the bank account 3 lakh 80,000. Calls in errors is 20,000 and share application or rather share first call or final call refers to the specific amount of 4 lakh here. Now, after this, the company decided to go ahead and forfeit the shares. So now we'll be passing the entry for forfeiture here. Let's start with that. So when we are passing the share forfeiture entry, we need to understand that we have to prepare the journal entry in such a way that right now the premium has been paid. So premium cancellation is no question in this specific illustration or rather in this specific forfeiture entry. So the entry will be very restricted to share capital account debit, to share forfeiture and to calls in arrears. That means first and final call. So let's pass that entry now. Now we have segregated the calls in arrears in share first call and share final call because these are the basic things that we need to understand, that calls in arrears is basically related to what all defaults that specific person has made. So that entry has been mentioned here. You can eitherly put rather as calls in arrears instead of these two things. It is one and the same. But just to make the calculation very simple for you and to make you understand what exactly you're supposed to take here is what we are taking it here. And that's the reason the entry has been mentioned in this specific manner. Now, when it comes to share capital, we're supposed to take the called up amount. As the company has forfeited all the shares of Mr. Khan after the final call, that means we expect that the whole amount of capital was called up, that is rupees 100. So 20,000 shares or rather 1,000 shares of Mr. Khan multiplied by 100 will give you the share capital amount. Now, share forfeiture account only refers to the specific items that he has paid. That means the capital amount which he has paid for application and allotment will be mentioned here. So, this person has paid 30 rupees on application and 30 rupees on allotment. So, we'll mention that thing here. Now, Mr. Khan defaulted on 20,000 share first call and 20,000 share second call or share final call. We'll mention that respectively. So this entry refers to share forfeiture account which has been completed. After this, we'll pass the journal entry for reissue now. So let's start with that. Now the reissue entry refers to whatever amount we have received. That means 500 shares were issued at the rate of 90 per share. So let's pass that entry. So the entry that we have passed here is bank account debit to share capital account 500 multiplied by 90. Again, this is the entry for reissue here. Now this is one entry that we have passed. Again, there is one more thing that we would like to iterate or rather reiterate it to you. The reason being, now this reissue has happened at an amount less than the face value. That means there is certain discount that we have provided. That is ideally a loss for the company. If you look from the company's point of view, it is a loss for the company. Now, this specific loss will be bared by one specific account that is known as share forfeiture account. So alternative to this specific entry, if the question asks you whether you have to calculate the profit on reissue or not, profit or loss on reissue or not, in that case you have to pass a different entry. So I'm highlighting that entry in green, and that's an alternative entry. Make sure that is not a continuation to this specific illustration, that is only an added information for you. So hence we are marking that entry in green here. Hence, I'm mentioning an alternative entry. Again, the mentioned number here is 11th entry. We have already passed an 11th entry, hence we are passing an 11th alternative entry. So in case if there is any kind of loss, that means whatever share capital we are supposed to take here, that means 500 shares multiplied by 100 rupees will be the share capital what we should be taking. But the loss that we have bared is 10 rupees on per share. So we'll bear that loss using the share forfeiture account. Now, the entry will remain the same, that is bank account to share capital. The only addition to it will be share forfeiture will be debited here with the amount of loss on face value. That means 10 rupees is the loss here. Now, if we can see, we had a share forfeiture balance of 60,000 as we have mentioned there, out of which 5,000 has been utilized to cover up the loss here, and hence we would have a share forfeiture balance of 55,000 here, because 60,000 was the opening balance, out of which 5,000 has been utilized. So the closing balance in share forfeiture will be 55,000, which will be transferred to capital reserve. So whatever share forfeiture balance we have, after passing this entry, we have to pass that entry related to transfer of share forfeiture to capital reserve. So let's pass that entry. So 60,000 was the opening balance of share forfeiture account, out of which 5,000 has been utilized. So we have to move the balance amount of 55,000 to capital reserve. That will be shown in the liability side of the balance sheet. Now with this, we have completed the entries, or rather the journal entries. Now it's time to prepare the ledger accounts. So we'll be preparing the share forfeiture account, we'll be preparing the capital balance account, that means share capital account, and we'll be preparing the bank account as well. Ideally, we're supposed to prepare only bank account, but in addition to this, for you to understand how the capital and working is going on between bank and capital and share forfeiture, we'll prepare the additional two accounts as well. So let's start with the account preparation. That means bank account first. So now that we're preparing the bank account, whatever entries are related to the bank account, or rather whatever journal entries that we have discussed right now, wherever bank account has been debited, credited, we have to take that entry into consideration. The first entry was receipt of application. That means bank account to share application. So on the debit side of the bank account, we'll have to share application. Let's mention that. After the receipt of application money, we refunded certain money. So that will be also taken into consideration. That entry was share application to bank. So on the credit side of bank, you'll mention buy share application account. Now, after this, we are only supposed to receipt, or rather the entry that is discussing about receipt of allotment money, receipt of first call, receipt of final call, wherever reissue entry has been made. So only in those entries we know that bank account was debited. So only that amount will be mentioned here. Now let's go with allotment receipt. Now, the allotment money has been mentioned as 10 lakh. This includes the allotment capital as well as the premium of 4 lakh rupees. Now, the next one will be share first call. So, share first call and share final call 3,80,000 has been mentioned. After this, we had reissue of shares which was done. Only in that entry, we have bank debit. So, we'll mention that also. Now it's time to balance this specific account. So let's figure out. We can clearly see that the debit side is more as compared to the credit side. The balance will be on the credit side here. So the balance on the debit side is 25 lakh 25,000, out of which 1 lakh 20,000 will be subtracted to get the balancing figure. So the balancing figure here is 24 lakh 5,000. We have prepared the bank account. Now it's time for us to prepare the share capital account. So let's prepare that account now. So the entry that will be passing here will be first transfer of application to share capital account. That means share application to share capital was the entry that we had passed. So on the credit side of share capital account will have share application. Let's mention that. Now after this we have the allotment capital to be transferred. So again on the credit side we'll have by allotment account. Now, after the allotment, we have the share first call and final call. We'll mention that here. And the last one is the reissue that we have to transfer here. Now, we have passed all the entries which are related to entries before forfeiture. Now, under forfeiture, we had share capital being debited. So, on the debit side, we'll mention all these entries. So we have mentioned forfeiture entries that are supposed to be transferred to the share capital. So share capital account debit to share forfeiture account to call scenarios. Basically share first call and share second call or final call can be clubbed together as call scenarios and can be moved to share capital. After which we are supposed to pass the reissue entry of share capital. The entry was bank account debit to share capital. Hence on the credit side of share capital we'll have by bank account. So now we have prepared all the capital account. We are now supposed to tally this account. We can clearly see that the credit side is more as compared to the debit side. Hence, the balancing figure will be on the debit side here. So the balance that we have brought down here is 19 lakh 45,000. Now the last account that we have to prepare is the share forfeiture account. So let's start with that account now. Now share forfeiture account was credited. That means on the credit side we'll have share capital account being mentioned because the entry in share forfeiture account, or rather when the forfeited accounts were mentioned, that was share capital account debit to share forfeiture account. So share forfeiture account credit side it will be mentioned as share capital account, or rather by share capital account. Now this account is being prepared to make you understand that the alternative reissue entry that was passed here, how share forfeiture account has been utilized. Now in that alternative reissue entry, we mentioned that bank account debit, share forfeiture account debit considering the loss to share capital account. So on the debit side of share forfeiture account, it will be to share capital with the amount of 5,000. Now, this is the closure of the entry. If you have to check, you can mention, or rather the entry that we have passed, share forfeiture account debit to capital reserve. Even if we pass that entry, it will be a self-balancing ledger. Let's check that entry. So the entry was share forfeiture to share capital, or rather capital reserve. So on the debit side of share forfeiture, it will be to capital reserve. So with this, we mark the closure of this sum. If you can see, the share forfeiture has been automatically settled out because it's a self-balancing ledger. The reason why we have done is this, because so that you can understand how the capital reserve balance is moved, or how exactly the share forfeiture account is prepared. So I hope this illustration has given you a lot of clarity about reissue of shares, the alternative entry for reissue, and then transfer of the balance of share forfeiture to capital reserve. Make sure the alternative entry for reissue is kept in mind, because in the next few sums that you will be studying in the next videos, you will have to go through only those entries. So this was a basic sum to make you understand how exactly things work out. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.